What's going on, everybody? Kevin Cage here with another crypto update. We got a bunch to dive into in today's video, including a couple new XRP ETFs that went live. I also want to wish everybody that celebrates a happy Thanksgiving. Make sure, unless you're the one preparing all the meals, that you're able to sit back, relax, and spend some time with family and friends. And if you're watching today's video, a big thank you, but make sure that you set your phone down at some point today and relax. Get away from the technology. And without further ado, let's dive in. Alright, first up, on the block, looking at the XRP ETF tracker, we have a new spot XRP ETF that went live 3 days ago by Franklin Templeton, one of the largest issuers. However, the demand has been really low. Look at the AUM, only 2.4 million if this is accurate. I'm not sure if this site needs to update a bit, but that is absolutely nothing compared to Canary, which has 330 million. And why I'm saying that's absolutely nothing, 2.4 million, is when we look at this picture shared by Status right here, as of November 24th, we can see Franklin Templeton is absolutely the largest issuer when you compare AUM for all of these organizations at $1.5 trillion. So Franklin Templeton is the only issuer well over $1 trillion. Everything else is peanuts. We can see, 200 million. Canary Capital is actually higher than that since their XRP ETF is over 300 million. But still, when you compare it to 1.5 trillion, absolutely nothing. We have $1 billion, 320 million for the futures, 8 billion, 20 billion, absolutely nothing in comparison to 1.5 trillion. So I wanted to share that, and not financial advice, believe whatever you want, but I wholeheartedly believe that we see a lot more demand in the future for XRP ETFs. We're not in the most exciting market right now. Bitcoin has crashed since 126,000, everybody's panicking. But I know that every viewer or investor that has experienced at least more than one market cycle, we know the game. And overall, ETFs, they just take time. It's not like they launch and then all of a sudden AUM floods in. If that happens, great, but you can expect it to take 6 to 12 months. And just base it off of how Bitcoin and the Ethereum spot ETFs took a little time to grow. And same thing for a bunch of different altcoin ETFs in the future. ETFs for crypto are here to stay. They're still growing, they're still nascent, we're still waiting on regulation. But we're going to see a lot of them for the top assets in the top 10, top 50, etc. HBAR, AVAX, Litecoin, Dogecoin, etc. And remember, ETFs, in my opinion, they're not an exciting crypto use case. That's just a way to connect to traditional finance to bring trillions of dollars into this asset class. So in my opinion, building this infrastructure, connecting to TradFi, it's just a side quest. And if you don't believe me, that's fine, because they're calling it foundational to global finance for ETFs in the crypto space. And some people will say, well, I don't get it. What's the big deal about these spot ETFs? Prices aren't moving. I don't really care about this news, but these are foundational steps. And think of it like this. They're basically packaging crypto exposure into an exchange-traded fund. So that way, institutions, they don't need the managed wallets, they don't need the custody, they don't need to secure keys and deal with all the self-custody risk. They can have other organizations take care of all of that. So by packaging crypto exposure into their own traditional ETF, they can basically treat crypto like any other security, which is already regulated. And what does that do? That lowers the barriers for adoption by traditional finance, all the big players, treasuries, banks, funds, etc., and it can help legitimize crypto as an asset. We have to remember, for institutional capital, it's usually a lot more stable, it's long-term, it's not retail speculation. This is all just one giant shift or a transition that we're seeing so that crypto assets can become more accepted by financial institutions, and they already are, compare it to 5 years ago. And all of these crypto ETFs, because they are buying from the open market, can lead to more demand for crypto assets. So this can lead to the bigger use cases once they're broadly accepted for cross-border payments and settlements, RWAs and tokenization, crypto custody, infrastructure, etc. We're seeing AI use cases, computes and computation. We are seeing DeFi or enterprise-grade DeFi. All of this is growing. And it's not going to happen tomorrow, but it's happening in front of our eyes. I need a new filler word instead of saying etc. a million times in a video. But point being is, with these crypto ETFs, guys, with institutional capital, once we start getting more stable inflows, that's going to allow long-term planning, predicting, and even more activity in the crypto asset class. And just to keep perspective, we have to think about technology shifts. So this financial shift is arguably the biggest technology shift we're ever going to see. But looking at other companies, we have Facebook or Meta, the rise of social media, everybody thinking it's silly and pointless, and then it leads to so many new businesses. Looking at the rise of Amazon, I mean, in the year 2000, even early 2000s, if you did your online shopping on Amazon, you were a weirdo. Why would you order Christmas gifts online when you can just run to the store and buy them yourselves? And then fast forward a couple decades and that paradigm has been flipped over. Everybody's ordering online. And really the same thing applies with everything for on-demand streaming, entertainment, everything. And I think in 2025, all of this is a lot more obvious now compared to talking about this stuff even 5 to 10 years ago. The US dollar is absolute garbage. We have never-ending inflation. We have debasement of currency. Purchasing power is getting lower and lower. People are looking at other ways to transact and store values. And hey, even an example right here, we have gold and silver, two precious metals, have created new all-time highs as people are seeking for a store of value. Now, speaking of precious metals, because I hold gold in my Roth IRA and I've had my Roth IRA with iTrustCapital for almost 6 years now. If you have a traditional IRA, a 401k, or a 403b and you're considering a Roth conversion so that those funds can grow 100% tax-free, the deadline is coming up December 31st, so it's coming up quick. And with iTrust, there are 0 monthly fees, you have full control over your funds, and you can trade 24/7, 365. And friendly reminder, nothing I ever share is financial, tax, or legal advice. Everybody's situation is different, we're all different ages, we all have different goals, so please always consult with a licensed professional. But having a Roth IRA in the crypto space over the past few years has been one of the best decisions I've ever made, and I've also had family roll over or actually convert their 401k into a Roth IRA with iTrust. So if you decide to act before December 31st, make sure that you check out the link in the top of the YouTube video description or this link right in the top of my link tree. So once you fund your account, you get a $100 funding bonus. I don't know about you, but I do not trust the long-term tax rates in the future. In my experience, taxes have just been going up and going up year over year. And the best part is, if you're nervous about the market or where we're at in the cycle, you don't have to go all in on crypto. You can hold the US dollar, have your account ready, and wait for that opportunity. But what's important is being set up to do so. And I realize a lot of people just don't get it. Like, some of the biggest financial decisions you make is when everybody else is afraid. And that's been my experience in crypto. When everybody believes the bear market is here and this is the end of crypto, that's the time to pull the trigger. And I know long-term viewers remember, I originally had my Roth IRA with BitIRA, and then I transitioned to iTrustCapital in early 2020. And then thinking about that time frame, we had March 2020 when XRP crashed down to 11 cents. With a Roth or even a Roth conversion, I'd rather be taxed now when I have little funds and then have that growth potential there. When you have millions of dollars, I don't want that being taxed at full rates. I want 0% tax. And that's exactly what you get with the Roth IRA. Alright, next up, let's dive into this, and apologies if my microphone is being a bit weird or like spotty. I need to play with these settings when I get time, but it's always giving me issues. Alright, next up, we got this news that just came out today. We have Ripple US dollar, the RLUSD stablecoin, recognized as accepted fiat reference token for use within Abu Dhabi's ADGM. So this is the financial center in Abu Dhabi. So the Ripple US dollar is fully recognized and regulated by the Abu Dhabi's Financial Services Authority, the FSRA. So we have this Abu Dhabi financial center that can legitimately use the Ripple US dollar, being used for payments, settlements, collateral, lending, prime brokerage, you name it. And this is real regulatory footing in one of the most respected financial zones in the Middle East. The Ripple US dollar has reached a market cap of over $1.2 billion since its launch in late 2024, so not even or coming up on 1 year. Going from zero to over $1 billion in market cap. Now, I'm sure you've heard some people say, or even Mark Cuban years ago, saying once an asset or market reaches over $1 billion, it's here to stay. So yes, based on the regulations, the backing of the Ripple US dollar, I think it's here to stay. So what does this necessarily mean for XRP, crypto utility, and the XRP ledger? Well, the Ripple US dollar is built on the XRP ledger. It also operates on Ethereum. And like we've already seen this year with a bunch of regulatory approval, this is strengthening the case of the XRP ledger being used for institutional blockchain. As I've already mentioned, different institutional use cases for payments, settlements, collateral, and lending, and prime brokerage, thinking Hidden Road or Ripple Prime. So this is all part of the process, being initially seen as a new stablecoin, a speculative asset, and turning into financial infrastructure. It's already safe to say that demand is growing for the Ripple US dollar. Now, what do I actually care about? I care about XRP price and demand. So I want to see the Ripple US dollar bring more money on chain from institutional demand and utility, and then that can indirectly actually add demand to XRP for liquidity, bridging, etc. And regardless, all of this is adding demand and value to the XRP ledger. Now, this is speculation, obviously, and this isn't financial advice, but imagine now, with this regulation, or this, I guess, regulatory footing, this can lead to the Ripple US dollar becoming the standard US dollar stablecoin in this corridor between the UAE, the entire Gulf region, and global markets. Now, why do we want all of this institutional adoption? Because the more the better and higher the Ripple US dollar grows, the better for the XRP ledger. It can motivate more activity, infrastructure, service providers for custody, prime brokerage, compliance, all these things that need to get done. So the XRP ledger isn't just developer friendly, it is enterprise ready. So we want the XRPL's usage to grow, not just the Ripple US dollar on Ethereum per se. Hopefully it can actually bring value to the XRPL. And by doing that, that can basically create an anchor for XRP's utility, bringing a lot more volume on chain. Now, we already know that every single transaction on the XRPL for the Ripple US dollar burns a super minute fraction of XRP. So the more the better, but this is an example with this ADGM, this financial center in Abu Dhabi, with a clear regulatory framework, and they recognize the Ripple US dollar is a compliant stablecoin. What this type of regulation can do for the XRP ledger is basically serve as a blueprint for more regulated crypto rails. And what does that do? It hopefully leads the way for more tokenization of real-world assets, more remittance and payment corridors, and really just stablecoin-based finance and lending. So once again, this isn't hype, this is reality, this is happening in front of our eyes. So with that, guys, my voice is already gone, so I hope you enjoyed today's video. I am wishing everybody a happy Thanksgiving, and I will catch you in the next one. If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.